Welcome to the Valuation Desk by Highland Global, where SBA business valuations speak bank. Thank you for joining me today to discuss a critical driver of mergers and acquisition success, valuation. In M&A, valuation isn't just a number. It's a strategic tool that aligns buyers, sellers, and lenders, secures financing, and closes deals. Whether you're an SBA lender, a buyer trying to structure a deal, or a seller navigating an exit, the following proven strategies help you maximize deal outcomes. Let's start with a valuation basic. Valuation is all about cash flow and risk. Whether it's an asset deal or a stock deal, cash flow drives the value. In valuations, the income approach shines, factoring in recurring revenue and the ability of the firm to generate free cash flow. Increased cash flow increases value, increased risk reduces value. Multiples are misleading and often can't be supported by the cash flow of the business. Focus on the valuation basics of cash flow and the risk of the firm. Get this wrong, and you risk overvaluing the business or derailing the deal. PitchBook's 2024 data shows 68% of failed M&A deals cited valuation disputes, so precision here is non-negotiable. Next, understand value definitions. Valuation isn't one size fits all. Fair market value reflects what a willing financial buyer pays in an open market. Fair market value is required for SBA loans. Strategic value accounts for synergies like cost savings or new markets, often justifying a premium. A 2024 Deloitte report warns that 55% of acquirers overpay by focusing only on strategic value without grounding in fair market value. My advice? Focus on fair market value. This is what you can finance with an SBA loan. If the seller wants a premium to fair market value, they're going to have to finance that. Third, normalize financials, but don't overdo it. Normalization adjusts for anomalies, say excessive owner salaries or one-time legal costs, to show true economic reality, but over-normalizing can erode trust. PwC's 2023 study found 72% of buyers demand detailed normalization schedules, and 45% slash prices when adjustments lack clarity. Back up your numbers and keep it transparent. Sellers, keep your books clean and adequately prepare your business for sale. Fourth, account for post-sale realities, especially management transitions. If key owners or employees leave, buyers may discount value due to operational risk. A 2024 McKinsey report notes 60% of M&A value erosion ties to poor transitions. Quantify this risk, say, a 10 to 20% value hit without key personnel, and document retention plans, like consulting agreements, to reassure buyers. Fifth, use scenario analysis to boost negotiation power. Consider best, base, and worst-case scenarios by tweaking assumptions like revenue growth or market conditions. This transparency counters low-ball offers and builds credibility. Bain & Company's 2023 data shows scenario-based valuations close deals 30% faster. For complex deals, try Monte Carlo simulations to quantify risk probabilistically. It's a game changer. But remember, sellers can sell the future performance all they want, but lenders finance performance demonstrated historically. Sixth, prep for due diligence with a virtual data room. A well-organized virtual data room with financials, contracts, and compliance records speeds up buyer reviews and valuations. A 2024 report by Ernst & Young says 80% of M&A deals now use VDRs, but poor organization delays closings by up to 25%. Structure folders clearly. Think financials, legal, and pre-answer common questions like customer churn rates. Finally, for SBA or bank finance deals, valuations must pass appraisal scrutiny. The SBA requires a fair market value appraisal from a qualified source. A 2024 U.S. bank survey found 35% of SBA loan denials stem from valuation gaps. Lenders should engage appraisers early in the process. Don't assume the purchase price negotiated is representative of fair market value or that the appraisal will rubber stamp the deal. And remember, a well-supported valuation isn't just good business. It's smart lending. In closing, valuation is a narrative that drives clarity and confidence in M&A. Understanding the valuation basics and how the valuation plays a crucial role in the process will help buyers, sellers, and lenders navigate the challenges of M&A, close deals, and create value. Thanks for joining us for this episode of the Valuation Desk. At Highland Global, we bring decades of hands-on experience to every appraisal we deliver. SBA lenders trust us because we understand what's at stake. Accurate, credible valuations that withstand scrutiny and support sound lending decisions. With thousands of reports under our belt, we don't just meet expectations, we help set the standard. Our deep knowledge of SBA requirements, valuation principles, and industry-specific nuances makes us the go-to choice for lenders who demand expertise they can rely on. For more information on valuation-related topics, be sure to visit our website, highlandglobal.com. Lenders know experience matters most.